The current price for Coinbase Global Inc. Nasdaq COIN is $283.14, reflecting a pullback of 4.69% for the day as of the market close on Thursday, November 13, 2025. It is essential to note that the U.S. market is currently closed, and this is the official closing price from the last session. The first thing you need to grasp about this crypto-centric stock is that the narrative being played out in the daily trading action is not just about the price of Bitcoin or the broader digital asset market. That is the expectation. The reality, the unexpected insight that you must focus on is the structural shift in Coinbase's revenue mix and its aggressive move into regulatory arbitrage, evidenced most recently by its public decision to reincorporate in Texas from Delaware. This isn't just a tax or legal footnote. It's a bold statement that the company is actively seeking jurisdictions that offer greater clarity and a more favorable operating environment for its decentralized future, a move that parallels the high-profile reincorporation of Tesla stock. This kind of proactive strategic alignment in the face of escalating regulatory ambiguity is the real driver beneath the short-term price swings and is the deeper reason why institutional money is paying attention. The general belief about Coinbase is straightforward. It is a proxy stock for the crypto market. When Bitcoin and Ethereum surge, Coinbase stock follows. And when they fall, as they have been over the past couple of days leading into this closing price, Coinbase shares drop even harder due to their high correlation and inherent operational leverage to trading volumes. This simple correlation is what keeps the day traders clicking, moving in and out with high-frequency strategies, often using platforms like Robinhood stock trading for quick access and simplified execution. But this conventional wisdom, this expectation falls short. The contrarian take, the deeper reality, is that Coinbase is not merely a trading platform anymore. It is rapidly morphing into a diversified financial infrastructure provider, with an increasing portion of its business coming from subscription and services revenue, which acts as a crucial buffer against the notorious volatility of retail trading fees. For example, their latest quarterly results show a substantial increase in subscription and services revenue, a segment bolstered by assets held on the platform and staking income, demonstrating that their reliance on pure transactional fees is decreasing. This shift means that while the daily 4.69% dip in Coin's share price might seem tied only to a macro crypto pullback, the underlying financial structure of the company is becoming quietly more resilient, changing the valuation conversation from a cyclical commodity play to a financial technology platform. This institutional conviction is not always reflected in the daily price fluctuations, creating a tension between the immediate price reality and the improving fundamental expectation. Looking closely at the recent stock movement, the current closing price of $283.14 sits notably below the intraday high of the past few sessions, and the volume, while still considerable, has seen some churn. This suggests a classic institutional harvesting gains mentality, especially after a period of strong performance. You saw this kind of price action clearly in the insider selling activity from key directors who offloaded shares recently, a common, albeit concerning sign for retail investors. The perception is that insiders are selling at a peak, but often these are prearranged Rule 10b5-1 trading plans designed to manage personal wealth and liquidity without implying a lack of confidence in the company's long-term outlook. This selling pressure, combined with general market anxiety over macroeconomic data and the lingering uncertainty from the SEC's ongoing regulatory posture towards the crypto space, has been a dominant force in the stock's daily swings. It's a complex mix. On one hand, you have major institutional players like Vanguard and BlackRock holding substantial stakes, as seen in the institutional holdings reports, signaling long-term trust in the growth story. On the other, the daily trading volume reflects intense short-term speculation, a pattern familiar to anyone who trades high-volatility names like Tesla stock or Nvidia stock. The battle between these long-term institutional convictions and short-term speculative forces is exactly what defines the current price movement of Coinbase stock. To truly understand Coinbase, we have to look past the trading desk and acknowledge what the company actually does. Coinbase Global Inc. operates as a leading financial technology company, providing an end-to-end financial infrastructure and technology for the crypto economy. It is primarily known for its consumer retail platform, which allows anyone to easily buy, sell, and store various digital assets. This is the simple, front-facing business model most people think of. However, the real depth lies in its institutional offerings, collectively branded as Coinbase Prime. This is a full-service platform offering custody, advanced trading tools, and financing for institutional investors. This B2B segment, which also includes its growing staking and stablecoin reserve management, is what shifts the company's valuation profile. Historically, during high-volume periods, Coinbase's transaction revenue was immense, making up the bulk of its income. But the strategic pivot, as mentioned, is to build a predictable, non-transactional revenue base. The subscription revenue, which comes from services like Coinbase One and staking rewards, is structurally less sensitive to the minute-by-minute volatility of Bitcoin or Ethereum prices. This is why the institutional world, the same crowd that manages the vast assets at Fidelity and Schwab Intelligent Portfolios, is increasingly engaging with the platform, seeing it as the most secure and compliant access point to the digital asset world. The legal and regulatory backdrop for Coinbase is also a massive factor, perhaps the single most important non-crypto catalyst. The ongoing tensions with the SEC regarding which digital assets constitute securities have been a persistent headwind. This is where the company's decision to move its state of incorporation to Texas becomes extremely important. It's a calculated response to the unpredictable legal outcomes in its former jurisdiction, and it signals a serious commitment to legal clarity, a prerequisite for attracting even more conservative financial institutions. It's a move of legal arbitrage that aims to stabilize the foundation of the business, a strategic decision that a self-investing retail client using a platform like SoFi Invest or Robinhood might not fully appreciate, but one that is absolutely central to the valuation of a regulated financial entity. The market's expectation is often that a bad regulatory outcome could crush the stock. The reality is that Coinbase is preemptively positioning itself to manage this risk by choosing a more business-friendly legal home base. This active de-risking of its legal profile is a powerful, understated signal. When we look ahead, the future outlook for Coinbase stock is framed by three primary, intertwined catalysts and risks, all tied back to the tension between expectation and reality. The first catalyst is the continued success of its diversification strategy. If the subscription and services revenue stream continues to grow faster than the transaction revenue, the market's expectation of Coinbase as a pure-play, cyclical crypto trading house will be shattered, forcing a major re-rating towards a higher, more stable fintech multiple. This is the core bullish argument. The second is institutional adoption. The launch of Bitcoin ETFs, while seemingly a competitor, is actually a net positive for Coinbase, as the company often acts as the custodian for these massive institutional products. This is a quiet, reliable revenue source that doesn't rely on retail speculation. The reality is that institutional trading volume is already a significant component, often overshadowing retail trading volume in raw dollar terms, and the trend suggests this will only accelerate. This contrasts sharply with the popular expectation that Coinbase is purely a retail brokerage. Platforms like Interactive Brokers, known for their institutional trading platform, are watching this space very closely as traditional and digital assets converge. On the risk side, the primary expectation is a major crypto bear market that causes a sustained drop in trading volume, suffocating transaction revenue. The reality, however, is that while this is a risk, the more subtle and damaging risk is fee compression. As online investing competition from other investing sites like Fidelity and its various offerings, including Fidelity ETFs and Fidelity mutual funds, or the low-cost model of Robinhood and SoFi Invest, not just in stock trading but in crypto as well, increases, the high transaction fees that Coinbase has historically commanded are under severe pressure. The race to zero in the trading world, which we saw in the individual brokerage space, is coming for crypto. The company's ability to defend its pricing power or replace